All right, it's time to surprise everybody. I am very bullish right now. Seeing signs everywhere. There's only one person I can think of that's not happy about this. Wait, are you kidding me? You're now bullish? That's it. I give up. That's right. Let's put them aside at least for the next couple quarters. Cycles are changing. Let's take advantage of this. Sit back, grab the cup of coffee. Let's go. Hello, this is Michael Loftus with Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, we are a practicing financial advisory firm. What does that mean? What you hear in this video, we apply to our portfolios. We do regular market updates. We do educational videos. Our latest, taxes and retirement, year-end tips, right there. And now, straight talk. So if you're looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing and hitting that like button. So today, in my opening, bullish. Can you imagine me? Yes, this is true. We're going to go through it. We're going to talk about the cycles, a big part of our process. We're going to reaffirm that with the charts, our signals, based on the headline. I think you know what they are. Sector spotlight, lots to talk about there because when we're shifting cycles, we have a lot of moves. And last but not least, what keeps me up at night? Guess what? Not that much right now. So let's go to the big charts. As our process has evolved, we've continued to work on it. We really implemented this in late 2018, talking about the cycles. We have really been here for quite some time. Now, for a minute, it looked like we're heading to cycle 4, which is not a good sign, okay? That is actually very bad. So what's happened here in the last few weeks, we clearly have moved to cycle 2. Christina agrees. What does that mean? Inflation goes up, growth, great stock picking time. So what else? When we look at our process this year, my favorite book of the year is Boyd, right? Reading books that make you think differently. Unbelievable. Air Force captain, did so much for the military, but he came up with what's called the OODA loop. Observe, orient, decide, act. And that's a big part of our process, right? Because we have to make decisions, all right? And that's what we did a couple weeks ago when it came time to start shifting our assets into cycle 2. So the first thing is we're going to get to the signals. No surprise, right? I called this the most important chart. We are right up against it right now. Will we break above? I think we will, okay? The other thing, tough to see, I've been talking about negative divergence. We have gone above that line. That is a good sign. Long-term trend, no surprise, is positive. Obviously, same thing for the midterm, which is your S&P weekly. We're going back here to the 18 trend line. We broke above it last week. We're breaking above it again today. Again, no surprise, we are positive here. So let's look at the daily chart. Now, a couple things. I've always said the market is way more than the S&P. You're really going to see that when I get into our sector talk because it is definitely much more where we are today. So when you look at where we are, okay, what do you see? Well, I mean, obviously, we're positive, okay? So here's your high September 2nd. We made another high. We're making another high today. So we're having a series of higher highs and lower highs. Both of those are, in fact, very bullish. Outside of that, I mean, what else am I looking at here? The biggest thing is going to be the VIX. I talk about that a lot, right? Price volume volatility, we're just around 20. If we get below 20, hold in that 15 range, it's going to be a buyer's market at that time. Yes, I know you're surprised in how positive I am right now about the markets. We are going to temper that a little bit at the end because anything can happen. So, of course, when you look at this, everything is positive. So when it comes to cycle 2, it's not just what you own, it's what you sell. Okay, so in this particular case, This is gold. All right, now look at gold. We have been very fortunate. 2018, this is where we got into gold, fourth quarter 2018. Obviously, it was a tremendous run. But then it started breaking down and you started getting a series of what? Lower highs. Now, we had one more bounce right about there and we sold out of our position in gold, and you see what's happened since. As of today, it's a good play. Now, what other reason? Because I've always talked about the dollar, okay, and the non-correlation with gold. So I'm going to have Andrew bring up a quick chart of our correlation going back to late September, okay? And when you see this, gold is negatively, okay, negatively correlated 0.98. So that means basically if this goes this way, that goes that way. In this case, when the dollar was going down, gold was going up. Now, let me show you through yesterday, and we're looking above 0.7, okay? Not negatively correlated. So it started breaking down. We lost the correlation, and that's why we got out of gold, okay? The next big move for us was treasuries. All right, we got out of both of our midterm and long-term treasuries. This raised about 10% cash. Today, we're up a couple more basis points. Again, if we are going to have growth, you would expect those 10-year treasuries to go up. And then anything that's related to that, I'll just show one, which is utilities, right? So we were in cycle 3, utilities, REITs, consumer staples, home construction. All of those have been replaced with other asset classes. Let's get into Sector Spotlight right now. All right, so first up, when I'm looking at the cycles, okay, if you're new here, we talk about the dollar a lot, okay? So here we see the cycle. Now, cycle 3, dollar kept going down, and then look. Right? Had a little head fake. That was that, are we going to cycle 4? But then we really just had a straight run down. This is yesterday. I will tell you the dollar's down today, which is you'll see in some of the performances since we're live here about 9:40. Okay, so follow the dollar and then you're going to see commodities. So dollar down, inflation up. Now, the other pieces we're going to talk about is Yellen. Okay, she's going to come in and load it up. She is going to print, and that's going to continue to drive that dollar down. Okay, so next up, what are some of the things we're looking at? Oil. Said this last time, started tiptoeing into oil. We've got a full position, got beat up yesterday. That was a buying opportunity in our opinion. So we like oil right now. You can see oil volatility is going down. And, you know, when you look at oil, a couple things. You've got the oil companies, you've got the price of oil, you've got master limited partnerships. So there's a lot of different ways to play the oil space, okay? And obviously also some individual names, which we own as well. So going back to the dollar, when the dollar was going down, that helps emerging market countries. Now, 5-6 weeks ago, we talked about this where there's a couple specific emerging market countries, okay, that were in cycle 2. So the cycles apply to everything around the world, not just the US. One of those was Japan. Now, this is an index. It's yesterday. It's actually up about 2% today because, again, the dollar's down. But you can see, okay, obviously you see where I bought, okay, and we've had a nice little run. Now, relative strength is showing it's a little bit overbought right now. Not to be unexpected. Be patient. That's the thing right now. We have a lot of overbought individual sectors and parts of the world. So if you don't want to chase countries, because I will tell you, when I look at my cycle 2 chart right now, there's so many around the world that you could buy. We focus on individually, China, India, and Japan we have in our models, but you can also buy just the emerging markets bucket. Now, you can see, right, got very much overbought, having a little bit of a correction. This is through yesterday, okay, up today, but look at that line, right? Kept on going up. Emerging markets with dollar down is going to be a really good place to be into this cycle. Next one, we went from consumer staples to consumer discretion. Why? Discretionary money. If we're growing, people are going to be spending money. We like that. Now, some of the things I'm not in, but I'm looking for an entry, okay, financials. So cycle 3, I was short financials, okay? We're now in cycle 2, rates go up. Obviously, banks should go up in this cycle. So I'm looking at a couple things here. This is live today, so it's up. It says 2.5, the index on banks. Like that, good entry point. You know, the only thing is we did get bounced here at the top. You can see momentum to the downside. So again, this was a little bit overbought. Gonna wait, gotta be patient. And the same goes for small caps. I talked about this last time about, are we seeing the shift? We have, okay? That shift is taken off. Quite frankly, it took off so fast, we missed it, kind of, not because we were in other places which were doing just as well. But small caps do very well in cycle 2. We'll look to add some of that, whether at the individual name or as a sector going forward. So, look at that. So many. Get out your shopping list. Lots to look at, lots to buy. Now, we're going to go to what keeps me up at night. All right, like what you see so far, make sure you click below if you'd like to schedule an appointment. So we talked about our OODA loop. So when we're observing, right, what are we looking at? GDP. When you see GDP, obviously, right, let's go back. I talked about third quarter 2018, and you can see, right, look at the peak. So even before the health crisis, we peaked in GDP. But guess what, folks? Now, right, we bottomed out. We're going up, we're going up, we're going up. Big ups, okay? Now, third quarter next year, if things go according to what we're thinking, then we're going to go down again, possibly a cycle 3 scenario. So seeing that we're growing despite everything that's happening out there with unemployment. Why? Because at the end of the day, it's the growth of these big companies which drive the stock market. So right now, not going to give away all my secrets. Again, you have to either be a client or see that. You can see our model. I always talk about not believing in the 60-40 model, not in a buy and hold, okay? And you can see today, core assets 18%. Now, what would that include? That's going to include, when you look at the long-term chart, tech, obviously, large cap growth, and something new, cannabis, marijuana, right? We have added that to our core. Why? Because we think long-term, that's a great place to be, especially with the new change in government. You see our emerging markets, 14%, not given the breakdowns. And I've got 15% in individual equities right now, which is the highest since 17. Why? Because again, when you're in cycle 2, as we go forward, it's a good time to pick stocks. It's a good opportunity to bring alpha. Alpha is return. Again, we've been very fortunate on those. We'll see what happens. Cycle 2 assets is 21%. We talked about that. A lot of that is oil, consumer discretion, etc. Down to 22% in bonds, okay, and 10% cash. Whoa, what's all that cash for? Well, a couple things. Anything can happen, so it's a little bit of a hedge right now. Don't want to get ahead of ourselves. All right, the other thing I'm looking to deploy, if we continue, if the VIX goes down to 15, we will deploy more of that. Okay, should not be a surprise. Biden announces Janet Yellen as the Treasury head, okay? Yesterday, she started her Twitter account, quickly rose, but she put out this tweet about helping America get back the American dream, okay? Let me be clear, all right? She's out of there. She's way wrong. The policies from the Fed. Now, if you're not aware, I did a whole series on that, 1 and 2 up here, has created the biggest wealth divide in history with printing all this money. Not going to get too much into it today. Here's a book called The Deficit Myth. This is specifically about modern monetary theory. You need to understand it. This is what the Democrats are pushing right now. Okay, it is primarily a Democratic thought. Republicans say you want to have a balanced budget. Of course, this hasn't happened in years, but this is a really interesting print because we can, and there's way more to that. Again, link below to better understand. That really concerns me. What else concerns me? You know, millions set to lose their aid at the end of the month. I think that that's going to be taken care of with the new administration. All right. And the other thing is we have first time with twice as many calls as puts out in the market. Everybody's bullish right now. So again, I feel good about the market, but it's really going to get frothy here. So what's next? Change things up. Be patient. Be smart, right? Look for those opportunities. Follow the dollar, the Fed, and inflation. We know they're coming with a print. That's obviously going to help things in the first quarter. And that index, if it goes above 25, we don't buy. If it goes and stays below 20 and holds in that 15 range, you know, it's off to the races. Follow us for updates. I'm always putting stuff out on Twitter and Facebook. That is the best way to stay in touch. Thanks for watching. Michael Loftus, Wealth and Wisdom TV.